What's happening, guys, and welcome back to another Sunday Scan. A very eventful week, tons going on. So in the first part of Scan, I will review just a couple of the moves, especially things around like that, the monthly options expiration cycle. I'll get into a little bit about that. And then I'm going to touch on a couple of the risks that might be looming in some of this new news or some of these new trends forming. So I'll get into that. And then later on, we're going to bring on Stan for the main watches, and we will cover the majority of Scan in that part. But I just want to do a very quick first part to talk about some of these concepts that you'll see that I mention a lot. And I just want to get a little bit more in depth so that if it's useful to you, that you can understand kind of the thought process around them for these big runners and then the mean reversion trade. So the first one that I'm really going to go over is Tesla. So Tesla's been one that we've been vocal about, especially over the last couple of weeks. We had, good earnings. We had a big boost to it with the election and all these things really playing out. So this was like on that earnings gap up and then some consolidation. And then you had a big trade with the election cycle. And just look at the range on some of these moves, from 240 to 360 for a $1 trillion stock. These are massive, massive swings. And if you know kind of like the cycle or, how to play some of these things, they can really, be massive opportunities. So the first thing that I really just wanted to touch on was this whole concept of like, the cycle of, especially for options driven names, how they run up into a big expiration and then the mean reversion. So I just want to clarify some things with that. So when you have, a stock that is very options driven, and you have names like Tesla, like Nvidia, it used to be like SMCI, and some of the other ones that they're always in the leaderboards for the dollar amount traded in the options, for the options volume, and basically the names that have the most option, activity in them. Options become a bigger part of what drives them. And so we talk about this frequently, but I'm just going to get into like the whole, what is the MOPX cycle? So that's MOPX is just short for monthly options expiration. And so what that means is that on the third Friday of every month, that is like the big MOPX. So that's like the monthly options expiration. Back in the day, and I'll touch on this later a little bit too, but back in the day, there used to only be monthly options, and then they added weeklies, and then they added dailies. But when it was only monthly options, it was the third Friday of the month. And so that's where all the volume would go. That's where everyone would kind of target the moves. And so that still rings true to some extent, even though we've added other expirations. MOPX tends to be the big one. So that's like the grand finale of usually like an option cycle. And so that's a good way to think about it. So you can see as Tesla was, a very options driven name. It's running up, had huge bullish flows. And that just means that people are buying huge amounts of call options, especially leading into a big expiration. So what tends to happen is that you'll have some kind of a catalyst, some reason for the stock to run, and then the options market starts to take it over. And that bullish flow really starts to show up as these moves just go parabolic. And a couple of things will start to happen is one, you'll have a ton of call buying happening, and then you'll have the implied volatility of the options themselves start to go way up. So as kind of a general theme, some of the cleanest, best moves, especially for a stock trending up, happens when you have the bullish flow start to come in and you have basically the implied volatility starting to expand on those options. That's when you get those huge moves, whether it's to the upside or to the downside. You have a catalyst, you have massive options flow in that direction, and then the option pricing starts to get really expensive. And that process you can see here. That is when you have these massive big moves that you can capitalize on if you're getting call options kind of leading up to that, and you can ride it or roll or do whatever to capitalize on that move up. And then as you get close to that options expiration date, that monthly options expiration, or it could be, some other time, but it's usually the MOPX, the monthly options expiration, that's when you start to flip your bias towards mean reversion. And we talk about this a lot. And so what that means is that as you get to like the third Friday week, the third week in that month, you start to shift your bias sometime in the middle of that week from very bullish or, call driven to when do those call options start to work against the stock? And that is kind of like flipping your bias for the mean reversion. And that is how you get these big mean reversion trades back down. So the reason why they have those mean reversion trades is because, again, as you have those bullish flows and you have implied volatility or the price of the option going way, way up, that starts to peak usually around the middle of the week of MOPX. And so once that point happens, then you start to have the reverse effect where as the decay kicks in, it is naturally compressing the implied volatility or the price of those options. So that basically brings the option pricing down. So basically, as all those calls are being bought on the way up, and market makers have to hedge their calls by buying the stock. So you have a huge snowball of stock being bought. And then as you get to the middle of the week on MOPX, that usually peaks. And then you have that snowball start to unwind as the options become less significant. The hedges need to roll off. And so that's how you get those big unwinds. So Tesla was just an incredible example of kind of the MOPX cycle playing out. So, I know that whether you're an options trader or not, doesn't really matter. These are the things that are driving these options driven names like Tesla, like MSTR in a lot of scenarios. So it's just good to understand that cycle. And then, as the monthly options expiration finishes, then you could have some consolidation. And then if you have those bullish calls come back, you could have the next leg up. Or if you have, some bearish flow come in, you could have a cycle down. So I just want to cover that topic to help people understand that cycle, that you have, a stock in play. It has to be options driven for this to really have an effect. And then you have huge amounts of bullish call buying, huge amounts of flow. The option price expands. And then as you get to near a big expiration, like MOPX, that third Friday of the month, as you get to the middle of that week, that starts to basically peak and unwind. And all those calls and all those, stock hedges that were bought for those calls, they start to basically unravel, and that is the big mean reversion trade. So you can have a bias both ways on a stock with big range, from, look at this, from 250 or 60 all the way up to 360 and then back down to 300. So whether you had a bullish lean or a bearish lean, just kind of picking your time within that options cycle can be hugely important to having that, on your side as you're planning out your trades. The next name is MSTR, and very similar thing. You can see with Bitcoin running and the MOPX cycle, you can see the exact same thing playing out where you have bullish flow, the options get more and more expensive, and then towards the middle of the week, on MOPX, you have that same exact thing happen where it starts to peak out, and then you have those hedges unwind, and that causes the big mean reversion trade back down. So again, from whatever that was, 380 down to 320. Again, whether you're bullish or bearish, it's fine. It's just you want to align your strategy with that cycle for the options driven names. So I just want to touch on that a little bit, and hopefully people can understand, how to use that with your own trading. Because on the way up, like this is the front side of the move, especially on the option side. And then as it peaks in the middle of the MOPX week, then it starts to kind of unwind and you have that big mean reversion trade. And then the next thing that I really want to touch on is that, in the market, it's been very bullish overall. Since the election, you've had all these things being repriced, new trends forming, and everything like that. But there's a couple of things that have been popping up on kind of like the macro front that are starting to raise my antenna a little bit. And one of those things is the dollar. So basically, all these different countries have their own currencies, and there's things that move the currency up and things that move the currency down. And when you have a lot of, things that are moving the U.S. currency up, and whether that's sentiment or, policy or things like that, the dollar rising very rapidly can start to have a negative effect on certain things. Like, for example, commodities. Commodities are almost all priced in US dollars. So as the dollar becomes more expensive, the commodity prices can start to get a little bit heavy. And so you look at things like copper that have had a pretty good move down from some things like that. So it's just more to be aware that when you have massive moves in the currency markets, just like we saw a couple months ago with some of the moves with Japan and the carry trade and all that stuff, you can have different versions of basically like when the currency markets start to interfere with the equity markets. And we could be around one of those times where, if the dollar keeps rising like this, you could have some, bearish action in the equity markets if that keeps up. So it's just something to have on your radar that when you have big moves like this, that can show up in other markets besides the currency market. So that's the first thing that kind of has my antenna up a little bit. And then the other thing is the bond yields for like interest rates. And this is another thing that if it rises too quickly and if it gets to too high of a level, it can start to impact the equity markets. And so again, it's not to make people currency traders, not to make people bond traders, but you have all these other markets besides the stock market that are massive, if not bigger than the stock market. And when they start to have extreme moves, that can start to spill over into the equity market. So I just want to put those on people's radar. And one of the things, like, you've seen a huge rise in bond yields and the 10-year yield, and part of that is as people are pricing in like a new administration, as they're pricing in new policies, you can have basically inflation expectations start to rise again. And, the Fed for the last couple of months, they've been, cutting interest rates. They cut 50 basis points, and then they cut 25 basis points. And now, you've had markets ripping, you've had all these things kind of going back up, and their data is all lagging. And so you're starting to see some of their data like plateau or even tick up a little bit. And so that could mean that the Fed is not going to be able to cut interest rates anymore if this continues. And so the bond market is kind of pricing that in, where the bond market is getting up to the level where the Fed rate is actually at. So all that to say that if you have a rising dollar rapidly, and if you have rising bond yields rapidly, those can be things that can spill over into the equity markets that aren't really being talked about too much. So, the markets have been bullish, things have been straight up, but keep this on your radar, because if these continue, if there's a narrative shift, that could really impact the U.S. markets, and we could be due for a pretty good pullback off of that. I'm not saying a correction is going to happen, but I'm saying that when these different things are happening in the macro world, my antenna goes up, and that's usually when it spills over into the equity world. So I just want to have those things on radar. So, and then if that does play out, you could have a few things like, you've already seen it with the NASDAQ, that could be impacted. And you could also have other things like IWM or KRE that could be impacted by higher bond yields or rates as well. So not saying a correction is going to happen, but I'm saying that some of the macro things are in place that it can start to spill over into the equity market. So, have your bias open to both scenarios where if the market is not really prepared for a bearish situation, even if it's just for a week or, a big correction, that could happen, and that could happen rapidly. So that's all I really want to cover. And now let's bring on Stan for the main watches. And before I bring him on, I'll give the disclaimer that neither he nor I are financial advisors, and these are not buy or sell recommendations. Everything that we talk about is for informational and educational purposes only. Now let's talk to Stan. All right, we got Stan back on for Sunday Scan. So, Stan, I'm excited to hear some of your market thoughts, some of your main watches. So, welcome back. Thanks for coming back on Scan.
Yeah, absolutely, Chris. Thank you for having me. It's always a pleasure to be on Sunday Scan and create a Sunday Scan.
That's right. So, we're going to get into some market thoughts. So, we've both been pretty active over the last week. What have you really been seeing?
Yeah, for sure. So I think, last week we saw some great opportunities between PLTR, SMCI, GME, and mainly the crypto basket. We also saw something in the quantum, nuclear names, etc. I think overall, like I said, the crypto basket took the spotlight with Bitcoin, going to new all-time highs. And then it pulled back a little bit, and now I think we're consolidating right around the 90,000 range here over the weekend. So we'll see how this resumes, but come Monday. But overall, it provided for that movement, for that liquidity injection into some of names like MSTR, Coin, Mara, etc. So now that the move is happening within Bitcoin, I think in the coming weeks we'll see more and more opportunities with some of these crypto related names. And as far as some of the other things that I'm seeing, we're seeing range quickly expand. And if the ticker is not part of that spotlight for that session, that day, that week, etc., that range quickly disappears. And also along the same lines, I think as we start to approach the Thanksgiving holiday, Black Friday, etc., the overall liquidity may subside a little bit, which should require some sort of an adjustment into the trading. I think, at least for me, what I was able to get away with over the last several weeks, that may not hold true for the next couple of weeks as we enter that phase. So just a couple of things to be aware of on my side, and as liquidity tightens up.
Yeah, and especially over the last couple of weeks, I mean, we really had like the post-election trade, all those new themes kind of coming out, and so like that, especially over like this past month or so, that's kind of been like the cycle. And
Mhm.
a lot of these cycles they start or they kind of get going when a new piece of information comes in, and the market needs to adjust all the pricing in a lot of assets to basically account for that new information. And so after a couple of weeks, you can kind of have some moves get priced in pretty well, where it's like some things get priced in well, and then you have like new trends or new pieces of information. So over the last couple of weeks, like I talked a little bit in the room about like the MOPEX cycle, and that's like the monthly options expiration. So it's basically the third Friday of every month. Historically, that was like one of the only times that people could buy options. It was like more monthly options. And then as time went on, they broke it down into weekly options and then to some things, daily options now. But the third Friday of every month has always historically been like the highest option volume kind of areas. And so a lot of times when you have new trends or themes, you'll have those expressed, especially in the options market, with that as kind of like a big grand finale is like that third Friday. And we just had that this past Friday. So I think a lot of names like Tesla, like MSTR, and a lot of other ones that you had some new trends, they are really, those were the ones to really watch into that kind of cycle, that monthly cycle. And so Tesla was just like a great example of that all playing out where you had a new piece of information, they had earnings, then you had the election stuff, you had all the options kind of going into that big expiration. Then you saw, what did it go from 360 down to 300? And you can just see the amount of range, especially in options driven names, is just incredible into those cycles. So now that first initial post-election cycle is kind of complete, I think we're going to be entering the next cycle, and that might be going into early December or into December, and I think you'll have new trends forming. You're having new information get introduced, so just a lot of new themes. But like you were saying, Stan, just needing to adjust, your range expectations, and then knowing, when one cycle stops and the other one starts.
Right. Yeah. Yeah. And if again, it's just important to be aware as things are shifting, and if there's a forward-looking event or catalyst, that would be also something to account for in the overall plans.
Yeah, definitely. So let's pull up your main watches if you're ready for them. We'll go through some of yours. We'll go through some of mine. We'll chat about them. And there should be a lot of things kind of moving in the weeks ahead. So I'm excited to get into it.
Yeah, absolutely. Okay. So the first one that I have on watch here is PLTR. Obviously, PLTR, a little bit of a funny there turn of events on Friday when one of their board members ended up deleting their Twitter account after a previous tweet. But essentially, it's the type of ticker now that it has a wide and dedicated following. So that needs to be accounted for around plans in trading it. And the daily, as it breaks out of this 40, 44 range and it starts to speed up, the daily sort of reminds me of SMCI daily back when it was breaking out of the 350 range, I think. Let's see here. Yeah, right about here. So this is kind of what the daily chart reminds me of PLTR right now, and as we saw with SMCI, right? It went much further than anyone expected, and then even after this first big red day, then we had another push higher before ultimately put in the top. So PLTR, that's kind of what the chart is reminding me. And I'll keep that in just more so the back of my mind, more so of a 30,000 foot view of what could potentially happen or what could play out. Obviously, the two businesses, have more differences than similarities. So again, not saying there's any sort of fundamental reason there, but more so just what does it look like on a technical view, and how something like that may play out. As for next week, is immediately what I'd like to see is that I'll participate in any gap of Parabolic. We'll use higher time frame levels to determine if there's any good liquidity zones. So ideally, again, anything over, I mean, who knows? This could be 68, 70 pre-market, and then goes to 75, and then it fails, or it could just stuff somewhere out of the gate on Monday, and it just fails right back down to low 60s. I think we'll just need to see a little bit more of the action pre-market, and sort of how things are moving. But I'd like to be prepared in the event it does what I'm expecting it to, or at least one part of it, which is gap up Parabolic. And once the exhaustion move happens, then would like to participate on any fail to follow through setups there. And then once it opens, what I'd like to do is if participating in the volatility range off the open, just be mindful of it, that if 10 o'clock, 10:30 comes in, 11, etc. Once the trend sets in, just make sure you're not on the wrong side of it. The next one that I have on watch is SMCI. SMCI, this one had a nice little bounce there after hours on some news with NASDAQ. The looming dark cloud, though, of delisting has kept the pressure on for quite some time, and I think hopefully we see this come back to life over the next couple of days, going into next week. But ultimately, nothing has changed fundamentally of their story. So unless there's something else that we're not aware of, to me, I think every pop will be met with some sort of pressure. So that's essentially what I'll be expecting. Any sort of gap of Parabolic, once we start, if we get into the 25, 27s area, even 30s, again, this is nothing to step on the front side, because the move and the fear is real, and it's in a way expected. So if you get caught on the wrong side, some of these reversals can be pretty lethal before they end up failing. So again, we'll be monitoring this more so on a higher time frame. Ideally, any sort of gap of Parabolic 25, 27s area, something within this this zone right here, that would be great to see. And then again, let it do its thing front side. Just look for some of the opportunities once the trend fails. The next couple of watches that I have, they're more so part of the crypto basket. So Coin, MSTR, Mara, and these are all going to be trades or ideas that are essentially developed throughout the day. Now that Bitcoin is moving, there is volatility here, there's interest, there's volume. So I'm interested in participating once the morning emotion settles, and then if a trend is established, if we stay heavy versus VWAP. So participating in these type of clear outs, and then fading them lower is something that interests me. So essentially, any sort of gap up Parabolic will be of interest and on watch, but ultimately Bitcoin has the final say here. If we see Bitcoin go through 100 over the weekend, and then maybe Monday 110, 120, whatever it does, or next week, then these obviously will have a lot more strength in them. So nothing again to step on the front side, but good to keep on watch if Bitcoin fails and these have some more room left in them. The next one that I have on watch is this IONQ, and this one essentially is a pretty standard gap up parabolic type of setup. The daily is, again, you can call it extended, and certainly is, but it doesn't mean that it can't just keep going, because every dip so far has been absorbed. You can kind of see this underlying trend there that's been holding. So ideally 30, 32s, and then if and when it fails, would like to fade the trend. And then these next couple, they're not so much on watch. They're more so examples of what I mentioned earlier, where if something is not part of the spotlight right now, if there is range expansion, it definitely not definitely, I'm sorry, it generally tends to fail quicker. It's just the type of environment that we're in. So CERO was an example of that. TCBP as well. You had some just very, very quick failures. MTEM, again, another one that had some sort of a clear out, and then it just failed. SPPL, this one, recovered a little bit there on Friday towards the end of the day, but generally, when it's not something that's part of an underlying move right now, it feels like that liquidity disappears quick. So I'm just keeping that in mind in the event it continues through next week. And it's just the issue with something like that is it's not like you can plan for it. It's more so reacting to what's happening in front of you, but reacting because you're aware of the type of environment that you're in. And that pretty much sums up the watches for me for next week.
Great. Yeah, a lot of similar thoughts there, especially with something like Palantir, PLTR. And, this is one of those names that has been on watch forever, finally broke out of a massive kind of base. And then you're just having this, huge confluence of things come together where you have some of the remnants of the AI trade. You have, some post-election trend things, because there's some overlap between some of the administration ties and some of the, people in this company. And then, you have, like we were discussing a little bit before we got going on the option side, Palantir has historically had relatively, cheap options. And so it's easy for people to kind of pile into the calls. And now you're starting to see them get a little bit more expensive. But until you start to see that really ramp up, that's a good sign, along with like the confluence of, something expanding at a faster pace out of a range. Those are usually the times where I like to switch my bias to more of a mean reversion, style of setup, and then just waiting for the right time, whether that's on a Monday or if it's on a Thursday, Friday. It depends, because, options are one thing that can cause the mean reversion, but also just, regular equity and overextension and, post squeeze outs. Those can also be great mean reversion. So it doesn't have to be on the option side. So I will be watching that one as well. And then I will pull up my chart, and we will go through a couple of these names. So the first one that I have on watch for the upcoming week is Tesla. And this is something that we talked about extensively last week, and just talking about, again, this confluence of things where you have positive earnings, you have the post-election stuff, you had all these trends kind of come together, and that all happened, it just, the amount of range that this had was incredible, where you had all week, it ran, especially the first couple of days, and then got up to that 360 mark. The options got super expensive. And then, the big mean reversion trade where you went from 360 all the way back to 300. And part of that was like the options unwind. Part of it was the mean reversion trade. And then the other part of it was that there was news that, the Trump administration is going to remove the EV tax credit. And, there's a case to be made both ways with that, and, with Tesla and with other companies. So basically, if you're not familiar with what the EV tax credit is, it's for certain cars that have to meet certain criteria that are electric vehicles. They get, up to a $7,500 tax credit. Some of them are more $3,500. It really just depends. But that's to incentivize people to buy it. It makes it cheaper for them. And so that's been in place for a long time to incentivize kind of EV production and consumption of those types of vehicles. So if they take that away, you basically have to look at, who gets hurt by that and who gets helped by that. So Tesla is one of the only electric vehicle manufacturers, especially in the U.S., that can actually stand on its own now. Because it's more established, it's had a longer track record, it has the manufacturing capacity. And so even though that, yes, the EV tax credit going away might hurt them initially, over time, that probably helps them because they're in a pretty good spot right now. And a lot of other electric vehicle companies are not in a great spot. They're still trying to ramp up production. And so even if you cut away that, it might help with Tesla's market dominance and everything over time. And then you have some other names like, let's see, you had Rivian, who had a really bad reaction to that news because, again, you have cars that are in a certain price range and everything that are going to get hurt more than others if incentives for electric vehicles are going to be taken away. So the EV trades will be on watch for me. I think that Tesla, if the market is bullish, I think Tesla has a good chance of kind of after this consolidation going up for the next leg of the run. And it almost reminds me of kind of this area here, where you had a big move up on earnings, then a big consolidation into the election. Then you had a big run up after the election, and now a big consolidation as the options kind of went from being super expensive back to more reasonably priced. And so what I'm going to be looking for in the week ahead is if that bullish option flow comes back, if you have the market bid, and if you have this become a leader, again, then you could have the next leg up to, maybe over 400 or maybe to 400. But if the market gets weak or if that EV tax credit news gets seen as a net negative, I'm really watching this $300 level as that big pivot point because that's the area where it really bounced hard off of on Thursday or Friday morning. And then, so that's kind of like the local pivot point that I'm watching. So if we get below that, it could get ugly, but if it holds that, then I think that we could have the next leg up. And then the next name I have on watch is XBI. So this is just the biotech, basically ETF. So this is just like a good read for like the sentiment in the space. But ever since RFK Jr. got appointed to the head of HHS, that really shook up a lot of the biotech names because it just brings uncertainty. Again, it doesn't mean it's a positive, doesn't mean it's a negative for anything. This is not a political thing, but it brings uncertainty. And you don't know how someone who has a lot of control over some of the regulatory things is going to impact the business world. So XBI had a initial down reaction to that to price in that uncertainty. And you had a lot of individual names like LLY, I think NVO and VKTX, a lot of them had big reactions down, and so that becomes a theme where you have a sector trade, and just like sector trades can go nuts on the upside when you have a catalyst and you look for relative strength, relative weakness, and all those things. It's the same exact thing on the downside. So the bio is now in a somewhat of a downtrend, especially into the end of the year as it prices that in, and you can see certain names who've had the relative weakness like MRNA. I mean, we've talked about this one for a long time, but just look at the relative weakness in a name like that. I said on Scan, one of my written watch lists a few days ago, that I thought that this could get really ugly into the end of the year because not only do you have the news, not only do you have tax selling, but also, who knows if they're going to be able to get something else approved. So I think this is just kind of a massacre into the end of the year. But some of these other names, especially the big ones like LLY, and NVO, a lot of these have been massive winners all year. And, the whole Ozempic thing and kind of the weight loss products, that's been a big theme for a long time. And so I think that as you get this new pricing in, you're going to have a big potential profit-taking cycle happen with a lot of those names, and that could really drop it pretty far. So these are going to be on watch for more downside. And again, expecting pops along the way and then seeing if those get heavy. So the bio names are definitely going to be on watch for me. And then NVIDIA earnings, that's a big catalyst next week. So obviously, NVIDIA is one of the largest companies in the world now. The AI theme has really played out to a big extent. And NVIDIA is one of the last real AI names that is actually holding up. It actually has the fundamentals. The chart is still intact. Whereas a lot of the other names like AMD or all those other ones, LRCX, ASML, they're all falling apart. And so NVIDIA is really one of the big last names in the AI kind of theme. And so the earnings are going to be key for that. And they better do super well, because if not, then the whole AI trade can unwind. But, and there's things with SMCI, like SMCI is, I think, NVIDIA's third largest customer. And so if SMCI is getting orders canceled and everything, that could trickle into NVIDIA. But, the thesis overall is still that NVIDIA is in a great market position. But if you have a new piece of information come in, it will get repriced and the entire AI theme could really unwind. So NVIDIA earnings is going to be on watch for me. And then this is just the semiconductor kind of ETF, the same thing, just to gauge the market sentiment and how the sector is reacting. And this could be a way to play some potential downside if you have bad earnings, because the entire sector could really get hit hard. And then you also have the leverage things like SOXL, XOSX, that are like the leverage ETFs as well. So many ways to play that. And then ASTS, this was on watch for downside last week. It had a clear out, a big squeeze and clear out right before their earnings. And so, it was actually kind of perfect, because it's not great if you're expecting downside and everything, and it has a big squeeze out. But if you have that squeeze out into key levels, and then you had earnings come, they had a big miss, and now, they're starting to unwind. That can be a good way for things to stay heavy. So again, just like with Tesla, you have a big pivot point around here at 20, where if it starts to get under that level, you could really have a huge unwind in this name. But if it holds 20, it might just kind of chop around for the rest of the year. So ASTS is on watch for downside. And again, kind of goes back to like the SpaceX stuff. It's going to have a much easier time getting approval, like SpaceX, for all like their cellular things and integration. So that could take away basically the future potential of ASTS. The next name that I have on watch, and this is like a new theme, just like how you had the bio theme come in post-election. Another theme is basically you saw like news of the Department of Government Efficiency come in, and they're going to be looking at all these different things of where can the government save money. And so what comes to mind for me is, where does the government spend a ton of money? And one of those areas is in defense. And you have these companies that are hugely reliant on government contracts. And so LMT gets about 75% of its revenue from government contracts. And so if you have, people going through and trying to cut government spending or anything, all these companies that are highly reliant on it are going to be under pressure as that uncertainty goes through. You don't know if they're going to say, we just slashed the Department of Defense budget by half. And then all these companies that are hugely reliant on it, they're going to get hit. So LMT is going to be on watch for downside for me for puts as more of that news gets priced in. And, I was looking for other companies that are highly reliant on government contracts, and I came across this BAH, and this has 98% of its revenue from government contracts. And so you can see what the potential is when that news gets, starts to get priced in and these companies get scared that they could have huge cuts coming to their revenue. So BAH is also on watch for more downside, but LMT, I think, could have a lot of meat on the bone. And you also have other companies like Boeing, BA, which they've had a huge amount of other problems. So, and they're reliant on government contracts. So that could also see pressure too. So I don't want to overwhelm with having too many names on watch, but those are really the main names that I'm going to have on watch for the upcoming week. And Stan, do you have any thoughts on any of those names or kind of those themes in general?
No, I think the last idea there with some of the defense contractors and essentially companies where their business model relies on a big part of it definitely will be on watch. It's just at this point I just don't know what will happen, right, with this Department of Government Efficiency and where and how far that's going to get taken. And the other thing is, it's not in a way an immediate thing. So this could be maybe like an initial reaction, and then who knows, 2 months later you're back at fresh highs, and right. So for me, it's definitely a great focus or idea, though, that I'd like to also further explore, and then in a similar way, essentially hinting that there is a big catalyst coming into the future, right? So come January 20th, and then the next 4 years, etc. It's good to think about a long-term view and where some of these hidden opportunities may come from by a governmental policy change, right? That's a big catalyst that has an impact and will be felt and somewhere in the market, right? If you find the right name. Headlines, PRs, right? Those are various catalysts. So I think it's just good to think about 6 to 12 months to 24 months down the road and say, hey, is there something happening right now that maybe the next 4 years that story for that company may change? Because if that happens, then this is how you catch the 10x, the 20x, the 50x type of moves. Right. Well,
Yeah,
that's it. Yeah.
100%. Yeah, huge catalyst, huge repricing, and if something's business model is in jeopardy of totally changing, then that gets reflected in the market price. So, yeah, so that's all we had. I hope that everyone has a great week ahead of you, and we're going to be very active in Investors Underground. So again, if you're not a member, I can consider joining. And then we're also going to be running some great deals coming up into Black Friday. So just stay on watch for those. But it's always a good time to be a member of IU. So Stan, thank you very much for joining me on Scan this week, and I'll see you in the room.
All right. Thank you, Chris. Have a great day.
You too. Thank you for watching Sunday Scan. Be sure to check out other content put out by Investors Underground, including interviews, podcasts, educational material, and more. Thank you.